CA RudraMurthy is here. Rudra has also got a very good handle beyond charts on what the HNI community, at least in Bangalore, is doing. Is there some nervousness, Rudra, on the street, on the screen? What are you recommending? Not going whole hog in buying, some trimming being recommended from your side?
Very good morning, Ajay. Thanks for having me in the show. First of all, a word on overall market. Yes, we have run up too much from the lows of June 4th and we are seeing some amount of time-wise consolidation. And in fact, it will be more healthy for this up move if we see even some price-wise correction. But still the medium to longer time frame trend is still up. And on the shorter term, having moved up so much in a very short period of time, we are now consolidating. This market is still buy on dips. Might be, yes, I agree fully with you that broader market and especially small cap, and if you are in an SME kind of a stock which has run up too much without fundamentals, then yes, you have to book your profit there. Cut your leverage at this part even if you are a seasoned trader, and also ensure you are in the right sector as well as right stocks. But I am not calling this market to have a huge fall. Whatever fall you will see is just a small profit booking or a correction. And I feel we are in the mother of all bull market, and this market, both magnitude wise and time wise, it will surprise on the upside, and it is a buy on every dip market. Good corrections have to be used as an opportunity to buy right stocks from right sector.
Are those right stocks from the right sector? Any cheat sheet?
Yeah, see, for me specifically, first let me talk on sector. IT looks very, very good at current market price, and in fact the downside is very limited, might be 5-10% from now, and it is a choice. You want to pick up either Infosys from the large cap, HCL Technology, or you want to go to Tech Mahindra and Wipro. It is just a choice. So for me, in the same order, I like Infosys at current level. Might be you can even look into Wipro as well as Tech Mahindra. IT really offers a great buy, and that will be my top pick. In fact, if you have to move to the second best sector, for me, it will be pharma. Look at stocks like either you go for Dr. Reddy or look at Sun Pharma. So for me, these stocks can even do good from current level. And even if you go to mid-cap pharma, look at Biocon. Biocon for me at around 360. I've been recommending this stock from levels closer to 260, 270 onwards. But even at 360 for me, Biocon looks very good. So from pharma, if you want to pick up, even look at Lupin, look at Dr. Reddy, look at Biocon, Sun Pharma. So for me, sector wise, yes, after IT, pharma can do very good, and few of the names I have given there. And for me, even FMCG looks very good. ITC, after a very long consolidation of last 5-6 months, it is now giving clear signs of breakout. Look at even stocks like Imami, Dabur. So it's a choice again, ITC, Imami and Dabur. And for me, yes, all these three sectors, that is IT, pharma and FMCG, and the names whatever I told can do very good. But one sector where I'll be very cautious will be PSU. In fact, in general, PSUs have gone up so high and so much in a very short period of time, especially pick up stocks from railway, defense sector. No doubt even closer to budget, they're seeing a huge rally even from those higher level. But I'll be very cautious in general in PSU. And if I have to be very specific on PSU, I'll be buying stocks like, let us say, Coal India, where still I have valuation comfort. I'll be looking at ONGC, still I have comfort. So in PSU, you have to be very stock specific. And from railways, if you want to buy, I will still go for IRCTC at current level. So it should be very stock specific in PSUs in general, but avoid all other big movers which have already gone up too high. I don't see any valuation comfort nor the fundamentals catching up. The public sector versus private sector play has already done enough. And now for me, you have to be very stock specific, especially in PSU. In general, remain cautious. Stock specific, yes, even at current level, I like ONGC, Coal India and IRCTC.
The PSU baskets largely, but what about financials? Any top bets within financials or any other top recommendations?
Yeah, see, for me, Bajaj Finance is one stock after their business update. It is just consolidating, and I won't be surprised to see a big short covering coming in Bajaj Finance. At current levels, the risk reward is very favorable, also available in futures. In fact, I have positions in the same and I've recommended it to our clients also. keeping a tight stop loss of around 7,040-50 zone, which is just 50 rupees from current level. I'm looking at initial targets of around 7,300 to come on Bajaj Finance. It's a good risk reward trade at current market price. Lot of short covering can come in this segment, but you have to have the tight stop loss at around 7,040-50 zone. For me, even Manappuram looks very, very good. Look at the volumes which it has given, and even in market like today, see the move in Manappuram. So for me, the levels of around 202, 203 is a very, very strong support which it tested yesterday and today. So on charts, it looks very, very bullish. So I'll be a buyer in Manappuram, looking at initial targets of 230 with a stop loss of around 202. Both are available in future, and you have to be very, very stock specific and sector specific in this market. And definitely I will have a caution in PSUs in general, and also have control on your leverage, and risk management will be of high importance. Look at budget and also the result season, which are two big events to come out now, and then take positions accordingly for short term.
Rudra, thanks so much for making time and speaking with us today. So that's the latest coming in as far as the market mood is concerned.